Hello, this is Jordan, and this video is being recorded on Tuesday, August 10th, 2021. Thank you for joining me. Please like, comment, and subscribe on YouTube if that's where you're watching this video. Now, in this video, I am going to show and discuss my updated gold correction analog chart. This should be a brief video because this is the only chart that I have for you. And here I'm plotting from the peak in gold, which occurred about a year ago. On that scale, time and price, I am plotting the 1999 to 2001 correction, the 2016 to 2018 correction, the current correction, and then an average of the, in my opinion, what I call the three worst or bottom three corrections, the three harshest corrections, as far as time and price with respect to gold bull markets. So the decline from after 2011 to 2012 and 1980 obviously are not a part of this. So I picked what, in my opinion, are the three worst bull market corrections. 1975 to 1976 is clearly the worst one. That is calculated in the bottom three, which is the blue line. However, I'm leaving it off this chart because it goes so far down that it destroys the chart itself. It's just more difficult to look at. So, with that being said, the average of the bottom three, and I said this recently in the last week or two, that projects a low. If I'm looking at daily data, this is weekly data, but daily data projects a low of 1590 around April, I think, April of next year. So that's something that's been clear over the last couple weeks. I have mentioned that in some subscriber reports. I think I put it in a video and also an editorial. So the speed of gold breaking down in recent days, that's a surprise, but gold trading lower is not really a surprise if you've been watching this channel because I've been expecting more weakness in gold. That's not to take a victory lap. That's just pointing out that I've been expecting more correction in the sector. Obviously, the way it's happened has been a surprise. But getting back to the analog itself, analogs are a tool. Just like there's many tools with respect to technical analysis, there's many sentiment tools you can use. So this is only one tool. We have to look at a bunch of these things and use a weight of the evidence approach. And so looking at the price action in gold, I've been really keen on the 1570 to the 1550 to the 1575 area. That's where there's a confluence of support. You have multiple things pointing to that level. So I do think gold is going to test that level at some point. And if we look at the analog here, that aligns with the blue line, which is an average of the three worst corrections. So this is a deep correction for gold, a very deep correction, obviously. And there you have it. There's not much else to say. We're in the middle of a deep correction. The market's pretty oversold. I did a flash update for subscribers this morning looking at where we could see a bounce, what are the important support levels with respect to gold, but especially in all the mining indices. So I hope you subscribers are able to see that. That's where we are. I mean, this is a deep correction, and unfortunately, I think it's going to continue. It's not the end of the world, but look, this is why you have risk controls in place, and I like to cut my losses in most cases around 20%, because if you have a 20% loss in something right now, especially a junior, that could end up being a 40 or 50% loss. So that's why you have to be careful and read the message of the markets. So I hope this video was informative. I know we're just looking at one chart and you had to listen to a lot of my babble. I'll have a lot more coming for you guys in the days and weeks ahead. Be sure to subscribe to this channel. Check out all of my work at TheDailyGold.com. Consider a subscription if you already haven't. I'm looking at some great companies which I think have 7x to 10x potential over the next couple years. So I'm really excited about those once we get on the other side of this deep correction in the market.